Hi, everybody, it's FIBO Group, and you are watching to the Market Watch review. With the U.S. warning of a vertical escalated Moscow and the EU warning that Beijing could send tech hardware to Russia, it's no surprise that risk appetites have been curtailed before the weekend. The Japanese made a modest profit, but most major bourses in Asia-Pacific were lower. After two losing sessions, Europe's Stoxx 600 is now flat. The U.S. futures are slightly mixed. The cautious risk-taking attitude is evident in the foreign exchange market, with the yen, Swiss franc, and yen showing moderate strength. The relative strength of emerging market currencies is an exception to this risk-off. Gold is consolidating at $1,950 and is up around 2% this week. After falling 2.2% yesterday, May WTI is down 1.4%. It is still up around 7% this week. Asian Pacific market. Tokyo's CPI increased this month due to the stronger yen and higher commodity prices. The headline 1.3% increase was slightly higher than anticipated. According to reports, Prime Minister Kishida also instructed the cabinet next week to create a supplemental budget. For the first time in 6 sessions, the dollar is sliding. It would be the biggest loss since November last year if the pullback of 0.66% is sustained. Before succumbing, the Australian dollar reached a new year high of $0.7535. It was supported by a little less than $0.7500. Market of Europe. UK retail sales were disappointingly low last month. This plays on the fears that rising costs are threatening households. The government's spring budget provided little comfort. Many households will see a rise in their energy bills and a steep increase in the tax paid for the National Healthcare Service. Sterling was at $1.33 by the middle of the week, but it has not been able to sustain gains since then. The currency has seen support at 1.3160, but it looks vulnerable. The euro is stuck in a $1.0960 and $1.1045 trading range for the fourth session. Market of America. Yesterday's data showed that weekly jobless claims fell to their lowest point in a generation and that the preliminary March PMI indicated an economy acceleration, with the composite reaching its highest level in 8 years. However, durable goods for February were disappointing. For the 8 sessions leading up to today, the US dollar has been falling against the Canadian dollar. It found support at CAD 1.25, but it closed below the 6-month trendline yesterday. Today, it could retest that trendline from beneath. That's all for me. Closely monitor the news background and be prepared for all the surprises of the market.